Good morning, dear students. Hope you all are studying hard at home and enjoying the e-learning initiative of Cambridge International School, Dasuya. I'm your accountancy teacher, Mr. Sunil Kumar. Today, we will learn one more topic of the chapter. But before begin with the topic, let's recapitulate what we have done in our previous lesson. Before starting the question, we have to recap the rules for debit and credit by both the approaches, that is traditional approach and modern approach. First, we will take traditional approach. According to the traditional approach, accounts are divided into personal account and impersonal account. In personal account, we will take a natural person, artificial person, a representative person. In natural person, these are the persons which is created by God. These are like Aman, Raman, Radha, Mukesh, etc. Artificial person. Artificial person means person which is created by law. And it can be any business. It's a small business or a large business. For example, Tata Industries, Reliance Industries, Punjab National Bank, State Bank of India, Cambridge International School, Chandigarh University, etc. are artificial persons. The representative persons, these are the persons which represents a group of person like outstanding expenses, accrued income, income received in advance, etc. Now, impersonal account, it covers two accounts, that is real account and nominal account. In real account, all the assets will be taken like tangible assets, intangible assets, fixed assets, current assets, etc. And nominal account, in nominal account, we will take all expenses and losses, incomes and gains. This is the traditional approach. Rules for debit and credit by traditional approach are here below. Number 1, personal account. It covers all the persons, natural person, artificial person, and representative person. Rule for the personal account is debit the receiver, credit the giver. Second is a real account. It covers all the assets, whether it's intangible assets, tangible assets, current assets, or fixed assets. Few of the example of assets are land, building, cash, etc. The rule for the real account is debit what comes in, credit what goes out. Number 3, nominal account. Nominal account covers all expenses, losses, incomes and gains. And the rule for the nominal account is debit all expenses and losses, credit all incomes and gains. Accounts covered under modern approach. Number 1, assets. Number 2, liabilities. Number 3, capital. Number 4, revenue. Number 5, expenses. Here are the rules for debit and credit by modern approach. Modern approach covers 5 heads. These are assets, liabilities, capital, revenue, and expenses. According to the modern approach, accounts are debit or credit when they are increased or decreased. So let's see all the accounts, when they increase or decrease, what effect they put on journal entries. Number one is assets. When assets are increased, it will be debited. When assets are decreased, it will be credited. Number two, liabilities. Increase in the value of liabilities, credit. Decrease in the value of liabilities, debit. Number three, capital. Increase in the value of capital, credit. Decrease in the value of capital, debit. Number four, revenue. Revenue is also known as income. Increase in the amount of revenue, credit. Decrease in the amount of revenue, debit. Number five, expenses. Increase in the amount of expenses, debit. Decrease in the amount of expenses, credit. So this is the modern approach and the rules for debit and credit by modern approach. Students, if you have read modern rules thoroughly, then you would have observed that rules for debit and credit for assets and expenses are same. That is, increase in assets and expenses are always debit, and decrease in assets and expenses are always credit. In the same way, rules for debit and credit for liabilities, capital, and revenue, that is income, are the same. It means if all the three are increasing, then they are always credited, and if all the three are decreasing, then they are always debited. Dear students, for your reference, here is the table which is given to you for the rules of debit and credit for a quick reference. It will work as a guide. It will guide you about the rules which we are going to use or apply in solving a question. Dear students, honors equity means capital. So do not confuse with the word honors equity. It is also called capital. So take this table as a reference guide. Today we are starting a next topic, that is ledger. First we will see the meaning of ledger. A ledger may be defined as a book or register which contains, in a summarized and classified form, a permanent record of all the transactions. It is the most important book of accounts, since the trial balance is drawn from it, and from the trial balance financial statements are prepared. Hence, the ledger is called the principal book. It means that after recording all the transaction in a chronological order in journal, we prepare ledger. In ledger, we take all the transactions related to one account into ledger, and all the debits and credits will be done over there. It is a summarized form of account in which all the transactions related to that particular head is classified, and it is recorded for a permanent basis. Since trial balance is prepared, trial balance is a book in which we record all the debits and credits of a transactions. Since it is prepared from ledger, and from trial balance, financial statements are prepared. Now, what is financial statements? In financial statements, we prepare trading account, profit and loss account, and the balance sheet. We will discuss financial statements in detail in another chapter. So, after trial balance, financial statements are prepared. Hence, this book is called principal book. So ledger is also known as principal book of accounts. Now the features of ledger. Number one, the ledger is a record of all the accounts. It means all the accounts are recorded in the ledger. It is bring to one particular account and all the transactions related to that particular account is recorded in ledger. Number two, it is prepared from journal. First, we have to prepare journal. After preparing journal, we will prepare ledger. So the ledger comes after journal. Third, ledger accounts show the current balance in the accounts. Now, according to when we prepare ledger account at the end of the ledger account, there is a balance carried down figure. That figure is known as the current balance of that particular account. So it always shows the current balance of the account. Number four, trial balance and final accounts are prepared from ledgers. Once the trial balance uh, Once the ledger is prepared, then we prepare trial balance and final accounts from it. Number fifth, ledger account summarizes the effect of transactions upon assets, liabilities, capital, income, and expenditure. Uh, it gives the effects of all these five heads: assets, liabilities, capital, incomes, and expenditure. Here is the format of ledger. Format means how we have to draw the ledgers. We have a particular format or a particular specimen for making a ledger. In ledger, there are 8 columns and 2 rows. In first column, we will write date. Second column, particulars. In third column, we will write journal folio, and fourth column, amount, that is in rupees. Again, after completing the 4 columns, again the next 4 columns will be same: date, particulars, ledger folio, and amount. Now one side of the ledger is called debit side, and the right hand side of the ledger is called credit side, and left hand side is debit side. So in date column, we have to write the date of the transaction, the date on which the transaction uh, took place, we write in the date column. In particulars column, we write the name of the account, like salaries, machinery, land, etc. In third column, journal folio, we will write page number or the reference number from where this particular account has come up. Now see, like in ledger we were writing ledger folio, sorry, in journal we were writing ledger folio. Now in ledger we will be writing journal folio. So we can see that the page number of the journal will be written in this column. Next, the amount of the transaction is recorded in amount column, and same with the credit side, the date of the transaction will be recorded in the date column. Name of the account is recorded in particular column. Journal folio, the page number is recorded here, and the amount of the transactions are recorded on the credit side. So this is the format of ledger. We have already seen the specimen of ledgers that a shopkeeper or the business is maintaining. In the previous slide, we have already seen that the format of ledger. Let's take an example to understand how we prepare ledger. Here is the example. Furniture of rupees 1200 is purchased from Modern Furnitures on March 6th. So we bought furniture from Modern Furnitures on March 6th. It is a credit transaction. So we have to first pass journal entry. So we are passing journal entry in journal. Journal entry will be date column. We will write date March 6th. In particulars, we are writing the head of the accounts. Furniture account debit to modern furnitures. Now, furniture is an asset, so increase in assets debit 1200 to modern furnitures. It's creditor, so it is a person or it is a company or it is an organization to whom we will pay in future. So it is a liability because we are going to pay uh, the amount in future. So modern furnitures are the liability of the organization. So it is increasing. So increase in liability is credited. So journal entry is furnitures account debit to modern furnitures 1200. Narration is being furniture purchased on credit from modern furnitures. So here I will request to all the students that they should write this journal entry on a page so that we can understand a ledger in a better way. Now, for doing ledger, we have to understand one thing very clearly. The rules of debit, whatever is debit in journal entry, it will be credited in ledger. And whatever is credited in journal, it will be debited in ledger. So, ledger works opposite of journal. So, here the furniture is debited, so furniture will be credited in ledger. Modern furnitures here is credited, so it will be debited in ledger. Now let's see how the treatment will take place in ledger. So according to the journal entry, we have to prepare two accounts. Number one, furniture account, and number two, modern furnitures. Now, because only two persons or two things are involved in a transaction, so there will be two accounts. First, we will prepare furniture account. After drawing the format, now furniture account, according to the journal entry, furniture was debited. So in furniture account, on the debit side, we will write two modern furnitures 1200 because furniture was debited in journal entry. So the amount will be writing on the debit side of the modern furnitures. Now, second account, modern furnitures. So we see that in journal entry, modern furnitures were credited. So the amount will be writing on the credit side, but it was credited by furniture. We have to write the opposite of the transaction. Whatever is written on the opposite side of the transaction, it will be written in the ledger. So modern furniture was credited, so it will be writing, we are writing the amount on the credit side 1200, but why it is credited? Because of furniture, we bought furniture. So by furniture account 1200. If you have seen that on the debit side we write to, and on the credit side we will write by. So furniture account, in this way we prepare a ledger. First we have prepared furniture account, then we prepared modern furnitures account. So hope you understand how we are preparing ledgers. These are called ledgers. Dear student, this is all for the day, and you are requested to do as many as questions you can do at home. If you feel any problem in any question, do let me know so that we can solve it as soon as possible. Thank you. This is all for the day. Stay safe, stay healthy, stay at home. Thank you once again.